it's a big piece to the culture that we try and extend here at Greater Alliance to kind of put out to our membership. You guys are like family, so what better to help a family member with than getting them a home, having a home and to build their family with. So today we're going to go over the whole buying and closing process. Again, as to Brian's point, please feel free to type in questions anytime, and we'll do a couple of polls along the way, and hopefully familiarize you guys as much as possible and make you as comfortable as possible with the understanding and all the content involved. All right, so let's jump into it. All right. Okay, so basically break it out. Oh, right. Okay, before we begin, we're going to talk about the 10 steps of buying home, but we are going to do a quick poll. Real quick, this is what Brian was referring to. The questions are going to pop right up. Just point and click to the answer, and we'll move from there. And easy question. Are you a current Greater Alliance member? Hopefully the answer is yes, but if not, then we need to definitely get you involved. So we'll take a few seconds and let people answer that, and then we'll jump back in. All right, sweet. Well, so far of everybody participating, 100% membership in the credit union. That's terrific. But again, certainly invite those who, as many people who can get involved, and definitely come and join us, become members of the credit union. So, all right, let's move right on. Okay, so we're going to keep things very simple. Obviously, a 10-step plan is always easy. We're going to go through them one by one in sequence to procedure from the beginning to the end. And if you were listening in, or if you are a participant in the past webinars that I've given here, I've always emphasized planning ahead. The actual verbiage I've used is playing the game like chess, right? So you always want to be trying to think 3 or 4 steps ahead, and then what that does is affords you the benefit of not running through the gauntlet when trying to get something, anything in particular, but when it comes to mortgages, definitely not looking to run the gauntlet as far as getting this done. We want it to be an exciting and fun transaction, not a stress-inducing, scary transaction, okay? And the way to delineate the fear and the stress is obviously to plan ahead. So when we're looking at the first one, step 1 is obviously get your finances in order, right? If there's, as I've said in other webinars, outstanding debt that you may have, you want to try and knock that down. You want your credit score to look as solid as it can. Basically, it's like going out to a date or to a function. You want to look as good as you can, make sure everything's all cleaned up, and present the best financial profile you can, because that does play impact in your rate, your payment. Okay, it's a whole domino. So number 1, definitely crucial. Get your finances in order. Make sure your game is tight, for lack of better words, and you know precisely where you stand from a financial standpoint. Okay. Number 2, and you're already doing this if you've been participating in the webinars, is get familiar with the industry, the mortgage industry. Just an inkling and an idea of the process and how it works. So again, we're on, I believe, webinar 4 already. And if you've been with us, then you've already accomplished number 2. If this is your first time, then you're already getting involved, which is great also. Okay, you're being proactive. Number 3 is getting pre-approved or pre-qualified for a mortgage. As we talked about in past webinars, you're basically just jumping online and applying for a loan. Okay, whether that be online, whether it be with one of our people here. You can always come in to any one of our branches, or even call in, and like I said, we'll hold your hand through the whole process. The mortgage application is really just a bunch of questions about you. We run your credit and take a look and say, okay, what can we do? How can we help you with taking the next step? Can we get you pre-qualified? And even if we can't, like I've said in other webinars, we don't kick anybody away. If we can't help you right then and there, what we're going to do is we're going to teach you. We're going to educate you and say, okay, here's what you do to get you where you need to be. Here's how we get that credit score up. Here's some ideas to manage that. Because again, you guys are members to us, and that's how we do things, right? We look to take care of our people. So, number 4, determine what you want, your wants and needs. Okay, by that I mean, hey, listen, where do you want to live? What kind of house do you want? Where do you need to be? From proximity to work, proximity to the family circle, the support system, so on and so forth. So again, these first 4 steps, first 5 steps, all these so far, all about planning and playing the game ahead, right? Thinking 3 or 4 steps ahead. All right. Number 5, you're going to start tapping into the real estate network. I will tell you, my recommendation to most folks has always been, hey, if you have the friends and family network, right? Between all the social media avenues and platforms, and just who do you know? You know, like you go to a buddy and say, hey, listen, I saw you just bought a home. Who did you work with? Was your realtor any good? You know, let them fill you in on it. It's a good way to determine, you know, who you're going to work with. Okay. Number 6, start looking for a home. Again, lots of mediums and avenues. You have Realtor.com, Trulia.com, realestate.com, and then there's always just you know, the newspapers, the pamphlets, and just driving around. You see the signs, go out, scope it out, do some reconnaissance. It's actually a lot of fun, you know, looking at different properties and imagining this and that. And particularly online, the websites today will give you everything right down to the local school system and the taxes coordinating to the property, and that's an important thing to look at also. Make sure, and I've said this in other webinars, that where you're looking to live is actually does fit with your budget and, you know, your lifestyle, right? If we're talking about New Jersey, there are places, your Chatham, your Far Hills, where taxes are about $22,000, $23,000 a year, right? So basically, if you're dividing that by 12, whatever your mortgage payment's going to be, you could be adding $2,000 onto that monthly payment. So again, play it like chess. Be looking around and understand your environment when you're doing this. Pre-offer tasks. Basically, pre-offer tasks rather. You know, when you're getting ready to you know, make an offer on a property, such tasks might be if you need to actually get a pre-approval letter instead of a pre-qualification to strengthen your bid. You might want to take a look into you know, getting an attorney, getting the people who are going to help you with this transaction lined up. Again, a real estate agent, realtor, attorney, homeowners insurance. We'll talk on that in a little bit. Next step, home inspections and other tests, okay? This kind of falls after you have made an offer and it's accepted by the people you want to buy the home from. Because at that point, you are going to do what's called a home inspection. We kind of talked about that in past webinars as well, where somebody's going to go in and basically look at that house, every nook and cranny of it, top to bottom, and let you know if there's anything wrong, anything that needs to be fixed, and even go so far as to say, hey, listen, you know, this may be good now. For example, like with the roof, they might say, hey, listen, roof looks good now, but in about 2 years, you're going to need a new one. You know, the furnace looks good now, but you might get one more winter out of it, and then you're going to be looking for another one. So it's a very, very, very important and crucial inspection to have for a property that you're going to buy and live your life in. Other tests could be things like radon, you know, water, lots of other things, and we'll go into that in a bit. But basically, 8 kind of kicks off where once somebody's accepted it, and this could be the future home that you're going to live in, and you want to have these tests because you want to make sure that you're getting what you're paying for, right? So that's the reason for that. Number 9, avoiding correcting last-minute problems. That's, you know, kind of going to be on the way. This could go off in 2 directions. One being, hey, listen, as far as avoiding correcting last-minute problems, should that inspection come back and he says, hey, listen, this house was held together by the paint, okay, because there's termites all over this place, but you can't see that because outside looking in, it looks gorgeous. That's why this inspection is for. That would be a last-minute problem. How do we avoid that or correct that? Or just could be something on a lesser scale. The furnace is not going to last you another year. What do we do? Do we walk away from the house, or do we go back to them and say, hey, listen, you either need to replace the furnace, or you need to knock $5,000 off the sales price, or we need a home protection plan. Something to that effect to insulate you. So that's kind of like number 9, avoiding and correcting last-minute problems. And then number 10, you're on your way to closing. So away we go. All right. So like we kind of hinted at before, step 1, right? Buying a home. Get your finances in order. We don't have to go through all the long jargon here. Let's just summarize it to say, and I've said this in other webinars, you want your financial profile to be as strong as possible, right? Your credit score, as I've said, is the tip of the spear. It is the blade. If it is dull, you know, it's like anything else. It's not going to be effective, and it's going to jam you up. Somebody looking to get a mortgage loan who comes to, you know, the credit union or any financial lender for that point, and comes in with an 800 credit is going to do a heck of a lot better than somebody coming in with a 600 credit. Okay, it is what it is. You know, that's how, you know, financial institutes understand your credit worthiness, okay, where your FICO is, okay, and somebody coming in with an 800, if I'm a lender and I have a 4% rate on the board, I'm going to give it to them. Somebody comes in with a 600 score, I'm probably going to be leaning more toward 4.75, maybe even 5%, because there's a risk there. I'm looking at one guy who has shown me a credit profile that is stupendous, that, you know, on task, on point, never missing. And I have another gentleman who maybe is missing car payments, missing student loans, missing credit cards, And these are secondary transactions compared to a mortgage, right? Because like we've said in other webinars, the big four as far as financial transactions that somebody has in their lifetime, mortgage is right up there. Okay, so if I can't look at somebody and depend on them to make a credit card payment or a student loan payment for $120, $140, $200, how am I supposed to feel when they want a mortgage from me that's going to cost $2,000 a month, right? So again, step one, make sure your credit profile is tight, minimize as much debt as you can, and keep that score elevating as much as possible. All right? Okay, next. All right, buying a house, getting familiar with the industry. Naturally, you only want to work with a credit union, right? Right. No? Yes. All right. Listen, credit unions, here's what I'll tell you as somebody who's been in the industry for a long time. I've worked with banks. I've worked with brokerages. Credit unions, by far, display by a wide margin a much greater dedication to the people that they're doing loans for. Okay, that is in fact why we call them members. You want to definitely understand the industry in general. For example, just one key point between, say, brokerages and banks, right? With the credit union, our people who are going to be working with you to put together a mortgage, for example, are not commission-based, right? So to put that in easier terms, we get paid just for showing up for work, like most people, okay? And that's, believe it or not, I love it because there's no pressure on me. There's no other dog in this fight, so to speak. All I want to do is take care of my people, make sure I find them the best mortgage program, help them through the transaction to make it, again, an enjoyable transaction, no stress, and like I said, move it so that we're looking to take care of the member the entire time. Again, you see here on the slide, credit union is member-oriented, a bank is profit-oriented. So you might have a real nice guy get on the phone with you from, say, Bank of America or PNC, but know this, that individual is compensated in a commission-based fashion. So they might say, hey, maybe you want a bigger house and a bigger loan, or they're going to look to put you in a certain rate that's going to give them, for lack of better words, not to get too jargonish, a yield spread or more money in their paycheck, like by convincing you that this higher rate is the way to go. Okay, so again, you as the member kind of fall second to the guy working at the bank because he's got to take care of himself first. All right. So again, understand the industry. I will tell you again, after 20 years of doing, almost 15 years of doing this now. Basically, I've never seen an environment as a professional in the industry that is more cultivated toward members than credit unions are. And it doesn't matter. It could be Greater Alliance. There are other credit unions out there. Greater Alliance is, obviously my home, so I'm always going to advocate for them. But that is an ethos that primarily runs almost solely through the credit union base. Okay. All right. So moving on. Step 3. Buying a house. All right. Get pre-approved. Get pre-qualified. All right. We went over this in prior webinars. Basically, what you're doing is you're going to hop online. You're either going to call in or you can do it, right online. And what we do is we take a look at your credit. We take a look at what you're advising us you're earning your income on. And then we run some numbers to make sure that based on the amount you want to borrow and what that corresponding mortgage payment would be, that you can handle it. Okay, a lot of people look at it as, they're gonna rake me over the coals. They're gonna look at this. I promise you, that's not what it's about. Okay, the objective here is to take care of you. What kind of guy would I be, or gal, or any of my colleagues who do this? If we put you in a position where, we got you the house that you really, really, really were shooting for, but the payment is hobbling you, and you're not enjoying your life. As I said in other webinars, you got to find that balance. There is, believe me, nothing good about having a really nice house that you can't afford to furnish, or you can't afford to go out and enjoy your life to go with it. Okay, it's more crucial. You see it now more than ever. You see it in the news, social media platforms, like there is a health balance to having a life where, hey, listen, you know what? I got this and I got this. It's not about running with the Joneses so much. So what we're going to do to get you pre-qualified is we're going to look at your credit. We're going to look at your income, what you're doing as a job and everything like that. And we're going to try and find you a wheelhouse, so to speak, from an affordability standpoint of a loan amount that you want for a property that you want. Okay. So basically what we do is we issue that letter, that pre-qual letter, that pre-approval letter. And basically, again, as I've referenced in other webinars, that is your ticket into the proverbial game. That lets you go out to a realtor and say, hey, listen, take me around and look at houses, right? Because the first thing a realtor or real estate agent is going to ask is, do you have a pre-qual letter? Do you have a pre-approval letter? Are you pre-qualified or not? And if you say no, in all likelihood, the realtor or real estate agent is going to say, do me a favor, give me a call when you are. Okay? Or they're going to try and pull you into their office and have to do it right there through their lender. Okay? And kind of push it that way. So what I will tell you is that without that letter, if you go to a seller, in all likelihood, you can go to all the open houses you want. No seller is going to take you seriously either, because they want somebody who's going to buy their house who's qualified and in the game. And if you're just kind of hanging out looking and you're not pre-qualified, you're a non-entity. All right? So that's step 3. You want to get pre-approved or pre-qualified. All right. Moving on. Okay. Again, just dovetailing into what I was just saying before about when we pre-qualify and we look at you. Okay? Determining your wants and needs when you're buying a home. Okay? We all know what we want. We all know what we could fantasize about. And, we've won the lottery and this and that. The type of home we want to live in. Okay, everybody loves the dream house, the beach house. Okay, the shore house, the vacation home, and whatever. The trick is to find, as I was saying, something that you like. Okay, and that is manageable. Okay. You see the diagram here, what you want, and it's the giant house, and then what you need is might be a little smaller, a little utilitarian. That gets the job done. I've always used the analogy when folks go out home buying, they look at it as almost kind of like the Olympics, right? You have your bronze, your silver, and your gold medal property. Same way people look at colleges, like your shooter school, your reach school that definitely might, you could do a good shot at getting into, and then there's your safety schools, right? Whatever your analogy, that's fine. Basically, the message here is, when you're looking at buying a home, okay, you got to make sure it fits all the facets of your life, right? So when you're looking at this, like I said, you got to put the whole running with the Joneses thing aside, because you want to have that balance. You want to strike that balance between a monthly payment, between proximity to your work, proximity to your family, making sure that everything is there so that you can, in fact, enjoy your life, right? Nobody's saying, hey, I don't want to, I can't go for a nice house. Nobody's saying that at all. Okay. It's just saying you want to temper it. Okay. And that's what this slide is all about. Determine your wants and determine your needs. If I could add anything to this slide, after, determine your wants and needs, I would write along there, and find the middle ground. Okay. Find the middle ground that's manageable and that you can enjoy your life. And that's where you want to be. Okay. So moving on. All right. Working with real estate agents. Okay, so basically just the short summary on this, realtors or real estate agents, believe it or not, there is a difference. Realtors are very proud of the term realtor, all right, believe it or not. They don't like being called real estate agents, just so you know, a little aside there. So there are real estate agents and realtors, and then, like I said, the realtors, that's a very prestigious title for them. So if you're out there and you're working with a realtor, don't jack that up. Anywho, basically, in any case, real estates and realtors, they can serve as both the buyer's and seller's advocate. You could have a real estate agent working with you, okay, the buyer taking you around and looking for something, and you may find a house that's listed by another realtor, and your realtor and their realtor will get together and start the offer game. Like you tell your realtor, hey, I want to make a $200,000 offer. The property might be unlisted for $250,000. They go back to the seller's realtor, and back and forth you guys go. Okay. Basically, they are designed to be your advocate through the early steps of the process, and they really should be with you through most of it. But once you kind of get into putting a mortgage together, they kind of step back. There's not a lot they can do anyhow, except kind of hang back and serve as a communicational piece for the seller, so that everybody is calm and in the know. But basically, you do want to understand what a realtor's job is, what their duties, what their loyalties are. And understand what their angle is, okay? They should be working for you. They should be advocating for you. They're making commission off the deal. That's how they're compensated, okay? So when I tell you when it comes to realtors, I always advocate this: go through your friends and family. Get somebody that they trust, who you know will take care of you, that you can trust, and it's just one less thing you have to worry about, okay? All right, moving on. Okay. Fun part, step 6, all right? You've done all your credit work, your financial profile is strong, you got a pre-qual, and now you're going to start looking around. This actually is the fun part, right? Because, you go out, you find a house, like, oh, that one's terrific, and then you look at another one, that one's even better, like, oh, I wish I could take this one, this one, this one. It's a lot of fun, right? You want to go out, you can look online, like I talked about. One is just, go out and take a look. Number two, their websites, real estate sites, like we talked about, all the online search engines. That's pretty much, options 2, 3, and 4 here. There are print ads, okay? There are, tons of periodicals out there to this day that you can pick up. You go to a diner, you see them all over the place, or a car dealership or whatever. They're out there, ShopRite, supermarkets, they're there. And then, if you're driving around, you'll see what are called for sale by owners. FSBOs is the acronym for them. And those are people who just want to sell their own home and they don't want to share in the commission with a real estate agent or a realtor. And they'll put a sign up on their yard saying, for sale by owner. They happen. There's some really nice houses that way. Some really good deals as well. All right. So that's step 6. All right. Step 7. Okay. Handling pre-offer tasks. Okay. Listen, this is again, when you're looking at this, you want to look at a lot of different things. Okay. But there are intangibles that come into play as well. Okay. Like we talked about the home inspection and having the property looked at and making sure structurally that it's sound. As far as an intangible thing, just not to go too deep into it, but give you some ideas. Nothing wrong, like it says here on the slide, talking to the neighbors. Get a feel for the neighborhood. What's it like? You have loud people. You have people running around at night. Is it quiet? Is it what you want, right? Okay. Is what's going on in the neighborhood? What's it like? Is it safe? Things like that. And then the other thing is, at the bottom there is checking comparable sales. A home is an investment, right? And like any investment, you want that investment to perform for you, okay? So, you hear different terminologies and different sayings when it comes to the real estate, industry, like location, the demographics. But the bottom line is this. It is an investment, and you want to make sure it's going to hold up. So you want to take a look at what houses in the area are doing. What are they selling for? So that, again, for 2 reasons. Number one, okay, hey, listen, I buy a home here in Chatham, which is a very affluent area. Is the property value going to stay? Okay, yeah, more than likely it probably will. Also, if you go buy a home in an area where, hey, listen, this home is on the market for $350,000, but the properties in the neighborhood are all selling for $200,000. What's going on here? Why is that? Am I getting taken? Okay, so this is why you want to look at some of these intangible things, and it's all about protecting yourself. Now, with things like that, your realtor should be helping you. That's something your realtor should be looking at. Like, hey, listen, they can easily provide you a report of what sales and the properties are going for in the area, right? And again, talking to the neighborhoods, even the realtors who are taking you for rides through the area should have a base idea of what it's like, okay? And they should be able to kind of counsel you on that as well. All right, moving on. Okay, so step 8, buying a house, home inspections, other tests, things like that. Like we talked about, we don't have to go deep into this, but the reality is this. As I just indicated, a home is an investment, right? So before you're going to drop down a ton of money, get a mortgage, move into someplace that you're going to build a life, okay, you want to make sure that place is tip-top, okay? And that means, testing for things like radon, mold, things like that. There's a lot of laws in place that a lot of this is going to be done for you, like lead paint disclosures, and certain inspections. As far as water goes, you have well water, you have sewer water. If there's septic system, they need to know about that. Should you get a home warranty, which again is basically like a mini insurance policy for the property that could last for 2, 3, 5 years after you bought the home to insulate you in case anything goes south. These are the things you want to do. It's very much common sense. Okay, I know I'm going over this, but I know most of you obviously understand if you're going to buy something like anything, you want to look it over, whether it be something you get at the store, whether it be a car, whether it be anything else. You want all the paperwork. You want to make sure that everything's done. So it is a bit of common sense, but not everybody knows all the different tests that can be run for doing this. And again, a lot of it, thank goodness, is part of law and regulation. But nevertheless, you want to have the inspections and stuff done. Okay. All right. Let's see. Step 9, buying a house, avoiding and collecting last-minute problems. Okay, so basically, as you're moving closer and closer to finally closing out the transition, you want, this kind of gives you just a couple examples, get the facts about residential appraisal methods, how to deal with low appraisal. There are lots of things that can pop up, okay, before a closing happens, okay, that could jam things or just some last-minute obstacles that you need to sort out. For example, they give the one here that you put an offer in on a home, right? And you're going to offer 200,000, and that's the offer accepted. But when it gets appraised, it comes in, and the value comes in at like 180, right? So now you're saying to yourself, wait a second, I agreed to buy this for 200,000, but apparently it's only worth 180,000. That's a $20,000. That's huge. Okay, how are we going to deal with that? We don't want to freak out. And for those who are new to this, with the first-time home buyers and so forth, this could be something that absolutely freaks you out. But this is where your realtor comes into play. This is where your attorney comes into play, okay? Because you're going to have a real estate attorney too when you're doing this. And we work with folks. I have people that a couple real estate attorneys who are terrific that we can always help you with or refer. Also, you just want to go through the friends and family network as well, just like with the realtors. But lots of different solutions to this. So don't panic. Could be something as simple as, hey, let's find out why is it only worth 180 instead of 200. Do we have the attorney reach out to the seller's attorney and say, hey, listen, this is what it came in at. We need to negotiate this. And the seller might say, okay, tell you what, I'll meet you halfway. We'll do 190. Okay, I'll knock 10 off the price or whatever. Lots of different ways to handle it. The point is that there are provisions in place. There are people in place with a transaction like this who are designed to help you, who are designed to circumvent such last-minute hiccups that could present. So don't worry, we'll be with you. Okay? All right, buying a house, and you're on your way to closing. Okay, most of your home buying problems are behind you now, and you're on your way to closing, or they refer to it as settlement. Now, at the closing, there's going to be lots of things going on you might not even be aware of. Okay, they're going to be transferring ownership and title and everything over to you for that property. In other words, the lot and block number that resident sits on, and whatever town that you're going to be purchasing on, that's all going to be under your name. Okay, and that's a terrific thing. Of course, you will now be paying real estate taxes on this said property that's now in your name. But hey, you got yourself a home and you're in the house. You're closing and you're signing all the paperwork associated with the transaction. So you're pretty much 99% there. All right. And what's going to happen is when they close everything, to summarize, and then we're going to go into this next part with the 7 parts of the closing thing. When you sign your name 50, 60 times at that closing, then you're going to slide the keys across the table and say congratulations. But before we jump into the 7 parts of the closing process, we are back with another poll. Okay, quick question for you to just point and click and give us some answers on. Which do you think is the biggest obstacle that prevents you from buying a home? That's a good question. So we have saving for a down payment, getting your finances in order, looking for the right home, or finding the right lender. So give us your thoughts real quick, and then we'll jump back in. Okay, so let's see where we stand. All right, so between the 4 options for answers, we have a 50-50 split between saving for a down payment and getting your finances in order. I agree 100%, okay? Looking for the right home is fun, okay? That's not work. Finding the right lender, again, you already know it's us. It's Greater Alliance, so that's easy. Saving for a down payment, we've talked about this in other webinars, that's hard, okay? It's hard in this day and age. It's hard in this state, New Jersey, okay? Getting your finances in order, again, that's work, okay? It's work that's going to help you a lot down the road, but it's work. So, yeah, definitely answers options 1 and 2, definitely the more difficult out of the 4. All right? So let's drive on. Okay, so here's how it goes, right? Moving forward from start to finish, okay? The closing process, okay, basically the mortgage origination process, if you will, okay, basically starts the minute that the seller accepts your offer to buy their home, okay? A sales contract will be signed by both you and the seller, okay? And basically, as the buyer, typically they look at you to put a little bit of earnest money down. Earnest money is just fancy talk for, well, earnest money. Basically saying that you have the intention to stay with the deal, all right? And usually it's a small amount. It could be as little as $500. That they put into an escrow, and then basically you're just telling the seller, hey, I'm in it to win it. I want to move forward with the deal, and here's a little money to support my mindset and put you at ease. All right? So that's step 1. Okay. Like we talked about, home inspection. Okay. Now, as the lender, we're going to do an appraisal, but as the buyer, you want to do that home inspection. It is critical. It is a crucial part of the transaction, and like I said, what's going to happen is The home inspector will go into the house you want to buy, basically look at it inside out, every nook and cranny, the walls, the wiring, the electrics, the roof, the structure of it. Look for everything and anything that could be wrong or outdated. Okay, evidence of any kind of pests like termite, mice, anything like that. Ants, carpenter ants, and go through that. It's going to check the wiring, make sure it's up to code. A lot of times, codes change, for lack of better words, when it comes to what you can and can't do from electricity and property, right? So the inspector's going to put together a very comprehensive report. It's going to outline, typically what they do in the first couple pages, say, okay, here are the most significant things that could be fixed, right? Now, does it mean that everything's bad and everything's wrong with the house when the inspector comes back? No, because what the inspection report would tell you is like what the house would look like perfect, okay? And that's damn tough to do. Even with brand new homes, I believe a home inspector could go in there and say, listen, the corner of this wall is off by a couple degrees. This wiring, they could have bundled it and tightened it tighter in the walls and in the drywall, blah, blah, blah. That's how good they are. That's how detail specific they are. So don't panic. What you want to basically do, what I did when I bought my home, is after the home inspector came back, I reached out to a friend of mine who's in the contracting business. He's a construction guy, and said, hey, listen, come on over. We had a beer. We sat down. He looked at it. I slid the report over, had him look at it. I said, what do you think here? Tell me which of the top 3 things that look real bad here. And he looked it over and said, listen, it was a good home. We could possibly look at this, maybe fix this. And then I went back to my attorney and said, listen, can we do anything about these 3 items? And that's kind of where the negotiation begins. All right. Step 3, loan origination. Okay. Well, listen, you've already done a pre-approval with us, okay, a pre-qualification. So we have pretty much 3/4 of an application waiting for you. So once the seller accepts your offer and you have that sales contract, you're going to forward that over to us, okay? And we kind of begin the process of originating and putting together your loan, okay? And the steps are pretty simple. I break it down to people in 4, okay? Step 1 is basically the application. You've done that. Step 2, we're going to get information from you that we need to support what you put on the application, basically pay stubs, W-2s, bank statements showing that you have the money for the deal to put down, pay stubs to show, hey, are you making the money that you told me you were making on the application? If you've seen the movie Jerry Maguire, it's kind of like the show me the money phase, where we just want you to get us documents to support what's on that application. While we're collecting that information, we're also going to order an appraisal on the property to make sure that the property you're going to buy and the loan we're going to give you, that property can collateralize the loan, okay, that it's worth what we're going to give you the money for the loan. So once we have those 2 pieces, once we have the appraisal report and the data we need from you, we go to step 3, which is underwriting, and the underwriter is going to review everything that we've submitted to them. And once they look at it and they're happy with it, they're going to do an approval. They're going to issue what's called a commitment letter, which is basically the approval of the loan in writing. And then we're going to start taking steps to get to the final phase of step 4 of the process, which is the closing. All right? We'll touch more on that in a minute. Okay, so like I said, an appraisal, all right? It says here basically, lenders like to protect their investments or reduce the likelihood of losses by commissioning appraisal at some point. To summarize this in a more base level, okay, effectively, we want to make sure that what you're buying has the value to collateralize or support the money we're lending you. It's got to be worth the loan money we're lending you, and that is the point behind it. Okay? Pretty much it.
I thought you were going to. No, I don't need. I put this out there. No, I put that.
All right. Getting homeowners and title insurance. That's number 5. Okay. Without a doubt, homeowners insurance will be required. Okay. As the lender, we want to make sure that the collateral to the money we're lending you is protected and insured. A meteor shower or anything like that. We want to make sure that the property is insured, so if anything does happen, everybody's protected, both you and the lender. Okay, title insurance, same thing. When we put together the loan for closing, your attorney is going to reach out and work with a title company, get your title squared away to make sure that the property is under your name and your name alone. Regrettably, there is a lot of identity theft and things like that occur, so the point is to protect your title and insure that as well. Okay, so that is step 5. Moving on to step 6. All right, the loan approval, like I just kind of touched on. The total mortgage life cycle, we tell people, listen, from start to finish, we can get it done in 30 days or less. But the typical turnaround time is about 30 days. I know it says here a month or longer. Anything outside a month is generally because of something that may have happened. Like, in other words, maybe the appraisal came in light and there's some back and forth negotiation between you and the seller. Perhaps there's something on your title or something that we need to get cleared up. But typically your vanilla, if you will, your vanilla loan is going to go through no problem in 30 days or less. Okay?
To their place to their.
Great.
Everything is there except the food.
Okay, so closing notices, disclosures, things of that nature. Once all the pieces are in place for your closing, okay, the title company or escrow agent or attorney, they're typically the same individual, okay? We're going to send you, we're going to reach out with both an email and a phone call saying, okay, this is going to be the closing date, this is going to be the closing time. We're going to tell you exactly how much money needs to be either wired or brought to the closing to, put together and close out the deal, okay? Typically, it could be at your attorney's office, it could be at the escrow agent's office, it could be at, even here at one of our branches at Greater Alliance, okay? Typically, you're going to need, ID, typically 2 forms, actually. Like I said, the money you're going to need to close the loan, oftentimes you'll have that wired from whoever your financial institute is. If it's not Greater Alliance, you'll have the money wired, or you can bring a certified check, okay? And yeah, basically that's all you're going to need. You're going to be signing a bunch of documents, the promissory note, all the different pieces of the mortgage itself, and it's going to take closings typically take about a half hour, 45 minutes, and then you move on from there. Okay, so just to talk about closing costs, all right? I know the screen is kind of filling up and might be freaking you out. It's all going to be broken out to you when you first apply on what's called a loan estimate, okay? It's going to be itemized. Looks like pretty much a menu at a restaurant. It's going to tell you everything from top to bottom that you can estimate the closing cost to be. This seems like a lot of stuff, okay? Not everything may even apply to you. Like if you look to the right, you see homeowners association. If you're buying a home that's not part of an association or a townhouse community or a condo community, you're not going to apply to you, so you don't have to worry about it. But the rest of this stuff, just to go through it real quick, obviously we talked about it. The home inspection and appraisal, typically you're going to pay for this stuff before you even close, okay? Appraisals typically run around $400. Home inspections about $300. So it tells you you're $600 to $1,000. The only time I see appraisals over like $400 is if they're in difficult areas for a appraiser to get to, or if they have something uncommon about them, okay, because they have to find other properties that are similar in size and square footage. Loan origination and underwriting fees. Hey, here's some good news. At Greater Alliance, we don't have any, okay? You're not going to see any fees as far as origination fee, application fee, or anything like that. As a matter of fact, Greater Alliance closing costs typically come about $2,000 less than anybody else on the street, and that's simply because we're like a contractor who basically just charges for the parts. In other words, if somebody comes and builds you a deck and says, I'm just going to build you and charge you for the wood and the nails, that's kind of analogous to how we do things. I'm not commission-based. The people here are not looking to make money off working for you. We're here to do a job, and the things associated with putting together a mortgage legally and lawfully in New Jersey are all you're going to get paid for, or billed for, excuse me. Okay? So you things here, flood cert, first month's interest, escrow deposits, credit report. These are little bits and pieces that need to be done for us to legally put together the loan for you. Okay? And it will be itemized and broken out over the loan estimate, and then again on the final closing disclosure, which is that last piece of paperwork that gives you the exact numbers across the board on everything. Okay. Okay, so what to expect on closing day? Closing day is fun. Closing day is exciting. It's kind of the culmination of all the work that you've done from, as we talked about at the beginning of the seminar, the pre-prep work to get you squared away, the hunting for the house, the getting your numbers together, the applying for the mortgage, the getting all the documents together, and finally setting it all up. Closing day, okay, what you're going to do is a final walkthrough. They're going to take you to the property that you're going to purchase. You're going to look at it one more time and make sure I'm happy, this is what I want, and I'm super excited, and this is going to go. Typically, it can happen anywhere within the 24 hours of the scheduled closing time. Most times I've seen it They'll do a closing in the afternoon. They'll do a walkthrough in the morning. Okay, and have one more look at it. Okay, and again, part of this final walkthrough is for a couple reasons. Number one, they want to make sure again it's what you want. If there were things that needed to be fixed or corrected, or if the seller said, hey, I'm going to buy this, but I'm going to be painting this room for you, or I'm going to update that, or there's agreed upon stuff, like I said, based on, say, an appraisal or a home inspection that need to be adjusted or corrected or attended to, you want to make sure that was handled. Because if it wasn't, and you go and close, then you have no power over the seller at that point to come and address the things that he or she may have agreed to address, right? Because now the property is yours, so it's on you. So that final walkthrough is very important. Okay, you see in the grid here, check to make sure request to repair has been made. Make sure the seller isn't leaving anything for you. I've seen situations. One example, I had a guy who sold a house, had a pool table in the basement. And I don't know if any of you guys have a pool table, but basically the table itself is pretty much slate stone. These things weigh in excess of 2,000 pounds. All right, getting that thing up out of the basement was something that the seller agreed to do. And on day of final walkthrough with one of my clients, he didn't. He left it down there. Okay, and that would have been on my client, my buyers, my members. They would have had to try and get that out of there, and that would have cost money and things like that. So when they did the final walkthrough and they saw the table down there, they were like, the seller had to get that out of there, right? So again, final walkthrough, faucets, plumbing fixtures, you're going to go through, you're going to flick the lights on and off, you're going to run the water, the faucets, make sure they're all working. Make sure there's no new damage because, you saw it when you made the offer, right? But maybe when the seller was moving their stuff out, maybe somebody's moving something, the moving guys come through there and they put a little puncture in the wall because they're trying to get a particular piece of oddly shaped furniture out the door and it scratches or scuffs the wall and you're like, wait a second, this didn't look like this. There was a hole here. Things like that. You want to make sure it's clean. Like I said, it's all about just looking at it and making sure it's the way it should be, the way you agreed for it to look. Okay? All right. So, like I talked about, when you get to closing, okay, you're going to sit down. You're probably going to sign your name in excess of 30 or 40 times. But these documents are very important, okay, and they're what's going to make the property yours, all right? Basic ones up front. One is the promissory note, okay. Hey, listen, this is basically the key document that says, I promise I'm going to pay my loan. I'm going to pay my mortgage loan. It is a commitment. You are signing your name, giving your word that I'm borrowing this money. Thank you, Greater Alliance. I promise I'm going to pay you back month to month. Okay. Another important one is the deed of trust, right? It's just basically the security instrument. It's a contract that gives the lender, okay, the right to, and hopefully, obviously, it never happens, to take the property back because it's collateralizing a loan if you fail to pay the mortgage, okay? So if you don't come through on your agreement, the deed of trust allows the lender, any lender, to take back the property, okay? And then there's the initial escrow disclosure. Basically, this is a form that describes how the lender plans to distribute the money when you make your payment. Escrow account, because you're going to pay, like I said, you're going to pay real estate taxes, you're going to pay homeowners insurance, okay? And we talked about in prior seminars what your real estate taxes are per month and what your homeowners insurance costs per month. That is your escrow, okay? And we make those distributions to the tax man and to the insurance company, all right? And that's what the escrow disclosure is about. Okay, so additional closing documents to read and sign, okay. I'm not going to go through these in too deep. I mean, you'll learn when the time comes, but just some basics, okay. You have the signature and name affidavit, okay. It's basically proof that the lender, that everybody involved, basically, they determine the legitimacy of your signature on all the documents, okay. Basically matching up to make sure you're you, okay. There's no security fraud or anything like that, identity theft. Certificate of occupancy basically means, it's ready and safe for occupation. Okay, and this is part of why they do home inspection and home appraisal. We don't want you to buy a home and that you're going to walk into and there's something dangerous there. Okay, the whole town doesn't want that. The state doesn't want that, which is why these laws are in place. You definitely need a CO or certificate of occupancy. Okay. Basically, the payment notification is another form. First payment notification, it basically lets you know, again, what the amount, including, principal, interest, taxes, insurance, escrow, what the breakdown and the date of your first payment is going to be, so you're ready to rock, just so you know. When you close, you typically have a month before you have to make your first payment. So if we were to close a loan today, Wednesday, May the 23rd, the first payment would technically be July 1st. So I have the remainder of this month and all of June before I would even have to make the first mortgage payment. Part of that is designed to get you squared away, give you some time to be prepped and ready, get your stuff moved in, get the house set up, and be ready to rock with that first payment. Okay? And then any seller or lender concessions, basically, this is a form that'll break out if there's any concessions made by the seller. Maybe the seller said, hey, I'm going to pay, because I'm trying to get out of here as quickly as possible, I'm going to pay 2% of the closing costs. Okay? Or I'm going to give him $500 toward a home protection, plan for the property, that kind of stuff. Okay. Again, going on, we're not going to go too deep into it. There's only a few more left here. You have a servicing disclosure. Just let you know who's going to be taking care of the mortgage and handling payments and things like that when you make your payments. PMI, we talked about this, private mortgage insurance. There'll be a disclosure there if your loan to value is greater than 80%. In other words, if you didn't put 20% down, if you put less than 20% down, you're going to have PMI, private mortgage insurance. Like I said, we discussed this in other webinars. There, of course, will be a document outlining the payment, how it all works. Again, you will be flooded with paperwork that will give you a breakdown of every single aspect of this loan. Okay? When I tell you sign your name about 50 times, it's because you're going to sign that you received each and every one of these documents. You understand what they mean and this and that. Nobody ever wants to hear this, but at some point you do want to go home and keep steady track of that mortgage paperwork and maybe glance it over. Don't read it all in one night because you probably won't be able to, but every so often, maybe we'll read a little bit more of it if you don't understand. So again, flood hazard statement. Again, if you're in a flood zone, you're going to get a statement saying that you're in a flood zone and that you're going to need more than likely flood insurance. Okay, especially prevalent for houses near lakes, rivers, beach homes, vacation homes, things like that. And then there's the appraisal acknowledgement. You're going to get a copy of the appraisal report, but this basically confirms you have a right to receive a copy of the appraisal. You'll have it long before you even see this at closing. Okay? All right. So, rounding it out, we talked about this last week as far as different programs and promotions associated with doing the loan. Here at Greater Alliance, this actually exact slide I reviewed with everybody last week, which is good. So we're just kind of reiterating what we have here. A home buyer savings program, okay? As we talked about, huge purchase, and any way that we could put something together for our people, our family, like you guys, to keep this that much easier. How about $1,000 credit toward your closing costs, okay? Or any kind of benefit for lack, or what do you call it? I know there's another program we're offering where you get a gift card at closing. Okay, we're going to talk on that in a second. To go out, maybe get some work done on the house or some furniture or whatever. But basically, here's how the savings program works. Very simple, very easy. There's the Green Path Home Counseling and Education Program. It's a quick online program, very easy, very beneficial. Okay, kind of reiterates and talks about a lot about what we've been doing these webinars on. You're going to do a pre-qualification with us because obviously you want to be with us so we can take you through the process. Come into either one of our branches at any time, open up a home buyer savings account, and you're going to want to throw in there at least $100 a month for 15 months. Okay. Cool part is you're also going to get a little bit of interest on that as you go through. Okay, over the time you've had this in there for 15 months, and at the end, in addition to the money you save, there'll be a $1,000 credit to the closing costs on your mortgage. It's a win-win, okay? It helps you to put away money. We're going to throw a little sugar on top of that money and grow it a little bit for you, and then we're going to throw you a huge gift on top of that money when it comes time to buy your home. And anybody who tells you like $1,000, like, oh, it's not that much, like, what's the big deal? I'm buying a home for $200,000. What's $1,000? I'll tell you, it's $1,000. And when you're sitting there ready to close, I promise you, and you're saying to yourself, okay, I got this much money saved up, and I'm going to need this for closing, and then you see that house. Any room you walk into in an empty house, your mind automatically starts to put together how you want to decorate it, what you would need, this and that. $1,000 is huge. $1,000 is getting a moving guy, okay, and having him or her take his company and move all your furniture over, right? So it's huge. So, yeah, we got those programs going on, all right? All right, Home Ready program, all right? We did talk about this a little bit. I have my colleague James Goodman, who is the Grand Master at this, but he has taught me quite a bit, and I did review this a little bit in our last webinar. Listen, it's tough to have 20% down like we were talking about. It's tough to get money put down in general, okay, with coming out of this generation's recession or depression, and again, we live in New Jersey, okay. But we have programs, a Home Ready program, all right. Really nice program, lets you put as little as 3% down. Okay, you don't have to have 10, 15, or 20% down. You don't have to be a first-time home buyer, all right? And it is very flexible in the different types of mortgages and programs you can do. Basically, any money that you can get, it doesn't have to be all just yours. It can be a gift, a grant, family member, anything like that. Can be used for closing costs, and it caters a lot toward folks who their credit may have been tarnished a little bit. Okay, we look at a lot of different avenues to try and make it work. And I'll tell you, Greater Alliance does a lot to make any loan work, okay? But this Home Ready is even sharper when it comes to that effect of, hey, listen, it's very uncommon that somebody with a roughed up credit score that happened because they just didn't feel like doing anything. There's always something that happens in life. Somebody gets sick, somebody loses a job, and you do what you can to survive, and sometimes your credit takes a little hit. And while you're trying to heal that up, maybe you need to buy a home, and we find a program here like the Home Ready program that's terrific, and so say, listen, we know you're solid, we know life happens. Here's a program that we put together to kind of help you move forward with that. Okay, and that's the Home Ready program. All right, and as I was talking about it before, hey, who wants a $500 gift card at closing? I do, and if you don't want it, I'll take it. Hey, listen, again, another program, all joking aside, Greater Alliance, limited time offer for purchases, all right? Basically, if you apply for a mortgage now through June 31st and close before the end of September, we're here to provide you a $500 gift card at closing, okay? And again, for those of you who have not bought a home yet, coming from people who have, any extra money at closing is a home run, okay? If you manage to go below budget for what you set at the end of the day when you close your loan, home run. Somebody sliding $500 across the table to you at closing is a home run, all right? And that's what we're here to do. So again, as you can see from what I opened up in the beginning, Greater Alliance, we love our people, and we really, really want to take care of our folks, our members, and make this particular financial transaction not only fluid and without stress, but we want to reward you. We want to say, listen, not only do we want this to be nice and easy and comfortable for you, but come on board with us. We're going to help you get it done. And by help you, it's not just going to be put together a loan. It's going to be put together a loan and give you some money, make it easier for you. So, in every aspect of this particular transaction, this is where Greater Alliance is looking to go with our people. Okay. Final poll of the day, poll number 3. We love the polls. Yay. Okay, and it's a simple one, yes or no. And I'm hoping that there's a 100% answer on this and no deviation. Have we covered everything that you were expecting in this particular webinar? Yes or no? And if we get bad answers on this, I'm afraid they probably won't let me come back. They can ask questions. So, and then we can ask questions too. But again, this poll, could determine my future. Sweet, 100% yes. Whew, okay. So, looks like you might be hearing from me next week at the next webinar. All right, so I'm glad to see that. If anybody has any questions, okay, there is going to be another webinar next week, May the 30th, renting versus buying. What I'm going to do is basically outline pros and cons, benefits, things of that nature. Very detailed. It'll be very good. It'll kind of give you a perspective and an idea how to plan and so forth going ahead. And now, if there's any questions, by all means, punch those in and we'll address them. Okay. All right. So, first question that popped: how much should I save for in terms of closing costs? Beside the down payment. Okay. So here's what I will tell you on that, and and we talked about this at prior webinars as well. Closing costs come in basically 2 parts. You can put in 2 categories. The first category, category A, is the down payment. If you're buying a $100,000 property and you're putting $20,000 down, that's category A, that's your down payment. Then you will have the closing costs. What I typically tell people from a closing cost standpoint, how much should you save on top of your down payment? I would tell you that 10 grand would be a good way to go. Okay, now closing costs aren't going to cost that much, but you always want to have a little extra. You never know. Okay, you're going to have to put escrow money down a couple months in advance of that. And they always like to see you have at least 1 or 2 mortgage payments in the bank so that when you get started, if anything happens, you're solid there. Okay, so I would say 10K is a nice number. All right. Do I have any recommendations on realtors? Here's what I'll tell you. I do not. Greater Alliance does not have a realtor network that we refer out at this time. It could be something coming down the road in the future. There are a lot of realtor programs that have approached us. We just want to vet it and find the best one for our people. Again, you guys come first, which is why I recommend talking to friends and family. Okay, anybody who you trust, who bought a home, who they worked with, and see, what they have to say. That's pretty much how realtors work anyway. It's primarily by referral. Okay. Another new question. Let's see. How do I go about finding an appraiser? Well, the good news is you don't have to. We actually handle that. Okay. The lender, it's incumbent upon me as the lender to have the home appraised to make sure it collateralizes the loan I'm going to give you. Ergo, I will be the one doing the research, so you need not worry. You will simply be the benefactor of the appraiser's work by way of the report that he or she will create. And once they send it to us to make sure you're good for our loan, we're going to email a copy to you directly as well. Okay? All right, let's see. Next. Pros and cons for sale by owners. Okay, that's a great question. So basically, this individual wants to know, what's the benefit to selling the home? Pros and cons versus being your own, selling your own home without the use of a real estate agent or anything like that. The immediate pro is obviously you're going to make more money on the sale because you're not going to pay a realtor any kind of commission for helping you do that. Okay, that's the primary. The disadvantage is you're not going to have somebody marketing your home and getting it out there for people to see, the way a realtor could. If you look at some of these websites today, Realtor.com, Trulia.com, these real estate agents have truly taken showing a house to an art form. It's almost like they do actual, like this, a webinar, a moving camera through the entire property it's all staged and there's beautiful music behind it. And, it's gorgeous. You're looking at these properties as if it's like you're walking through it. So, and they're getting it out there and they're marketing it and they're getting attention to it and they're doing open houses where, the realtor goes and sits at your house. You go out for the afternoon and the realtor stays there and has people come in and shows them around. So the big pro and con there is, okay, you don't have somebody marketing your house. But the pro is if you're in an area where, and this is happening pretty prevalently, particularly in New Jersey, there's not a lot of inventory out there. It's definitely a seller's market. I can tell you my parents lived in Morris County in Long Valley. They didn't need a realtor because my father would go out to the mailbox every couple of weeks and there would be flyers stuffed in his mailbox saying, if you're thinking about moving, please call me. Okay, I want to buy your home. That's how hot it got at one point. So, again, pros and cons. If you're in a time where you really got to move, realtor is a good way to go because they're going to market the hell out of your house. They're going to get you out there with virtual reality, open houses, things like that. But if it's a market where, like I said, in the case of my father, where he's going out and finding random letters in his mailbox that people want to buy his home, he could probably save himself thousands of dollars on paying out commission to a real estate agent. All right. Final question. What's the process when it says subject to bank approval? Okay, this sounds like if you're buying a bank-owned property, like maybe it's in foreclosure or forbearance. A lot of people do that. There are lists out there where you can get tremendous deals on properties that have been foreclosed upon or bought back by a lender. Okay, that's called a bank-owned property. And that might be what this question means as far as bank approval. Tricky transaction. It can be very beneficial. I can tell you, I did have one member who went, and you can get these foreclosure lists online, like $10. Shows you listings of all these houses that are owned by banks. Banks don't like owning houses, straight up. They want to get rid of them because they can't maintain them. And the less that they can maintain them, the more the homes begin to depreciate. Okay, things get overgrown. Pests come along, like ants and things like that. They just can't. The banks are not in the industry to maintain property, so they want to sell them when they have to repossess or foreclose on them, they want to resell them as soon as possible, and that typically means they're at a disadvantage, so they'll sell it for less. Okay. However, it's not all roses for you, the buyer who's looking to buy them. Lots of times it's as is. Okay, so you can have an appraiser in there, a home inspector in there, and they could say, yeah, you know what, this roof, you might get one more winter out of it. You don't get to go back to the bank and say, you know what, this roof only gets one more winter out of it. I want to change the sale price. The bank's going to look at you and laugh and tell you, hey, it's as is. That's what as is means. That's why this property might be worth $300,000. I'm selling it for $250,000. Take it or leave it. And there is no negotiation. Okay, so that's pretty much what that means. Pros and cons to that. Again, you can get one hell of a deal, but you also have to understand that at the end of the day, that the bank or the financial institute that owns that property is not powerless. They're going to say, listen, this is the cost of this price. I'm giving you this price. Whatever's wrong with it, that's on you. It's on your dime. Okay? That's about it. So again, I just want to thank everybody for coming out. There is going to be one final survey for a chance to win $25 gift cards. Man, you guys just rolling in gift cards here. Take your chances. Take 5 seconds. Roll it out. You know, nothing wrong with getting $25. You know, for nothing more than answering a couple questions, right? Again, want to just thank everybody for coming out to the webinar again. There'll be another one, and we look forward to seeing you then. All right. Have a great week. Take care.